Well, the title of the video says it all. MSTE is an investment IQ test, and most YouTubers failed. Except, of course, the handsome giga alpha males in the space, Adriano and Gary Gill. Now, if you guys are watching this, trust me, you can turn it off. You don't need this pep talk. But for the rest of you lettuce-handed Larrys, stay until the end. Now, I don't necessarily mean that MSTE is an IQ test in the sense that, you're smart if you buy it and stupid if you don't. No, that's not what I mean at all. Now, obviously, I like to poke fun at emotional investors and call them lettuce-handed Larrys from time to time, but that's just me trying to make light of the situation. What I mean is that MSTE is a multi-tiered investment, and it takes someone with a lot of investment knowledge, specifically in the crypto space, and know-how of how market cyclicality works to not get scared out of your position when it goes against you. I've seen way too many people here on YouTube get into MSTE without really understanding the product and then sell out of fear here at the bottom of the market. And unfortunately, losing a lot of hard-earned money in the process. And now those exact same people will have to sit through the even more horrifically painful experience of missing out in the recovery. Because again, they don't understand what they're investing in and they don't understand crypto market cyclicality and the seasonality of its volatility. So give this video a like, subscribe to the channel, and if you want to support the channel, if you want access to members only content, or if you want full inside access to myself and my investing activity day to day, charts, graphs, stuff I'm looking at, or simply want to just talk investing one-on-one, join the channel membership down below. Now let's get into today's alpha. So I've talked about this on previous videos of mine on the topic of MSTE, but I'll go over it again in case you missed that video. So in order to understand MSTE, we have to understand covered calls and the company MSTR. And in order to understand MSTR, we have to understand Bitcoin. But why do we need 3 tiers of knowledge here? Well, because each product stacks on top of one another. MSTR is, in a way, a derivative of Bitcoin in enterprise form. And MSTE is a derivative of MSTR. So you can't understand one without understanding the others. And the deadly sin that I have noticed with where finance YouTubers tend to fail the IQ test of products like MSTE is that they don't understand one or more of these levels of knowledge. They have a gap in their knowledge base. They either don't understand the volatility of Bitcoin or where it is in its market cyclicality because it doesn't run at the same time as stocks or as gold. They don't understand MSTR as a company and what their long-term goals are. And a huge majority definitely don't understand its volatility profile. That this correction made that for sure. And they definitely don't watch my earnings call reviews to understand it better. And sometimes people who really got themselves in a pickle with the MSTE investment is they don't understand the function of MSTE, which, I mean, yeah. So let me help you. Let's get through each phase of the investment dominoes, and hopefully by the end of this video, you'll have a great foundation of why MSTE is doing what it's doing. And no, it's not because it's a bad fund, okay, guys? So the first and probably biggest domino to understand, Bitcoin. Because the rest of the investment, whether it's MSTR or MSTE, is all downstream to this. So you understand Bitcoin, you understand pretty much 90% of MSTR and MSTE. So there's a couple of things you have to understand here. Bitcoin is, first of all, super volatile, currently sitting at a 34 vol, which is the lowest volatility reading it has ever produced in the history of the asset. And we'll get back to why this matters later when we talk about covered calls and MSTE. But on average, Bitcoin normally sits around a 50 to a 70 vol. Translated to English, what does vol mean? This means that options markets are pricing in a standard deviation of a 50 to 70% move over a specified period of time, most cases over the next year. So if an asset like Bitcoin has, let's say, a 50 vol, the options market is pricing in over the next year 50% up from here or 50% down from here or anywhere in between. So understand that when Bitcoin falls 50% from all-time highs, this is like the S&P 500 having a 20% correction. It's normal. It's not unprecedented. It's expected. And again, this knowledge will flow downstream when you're trying to understand the volatility profile of MSTR and therefore MSTE. Now, the next thing you have to understand about Bitcoin is the Bitcoin power law. The Bitcoin power law isn't some random trend line fitted to Bitcoin's price action. It's a functional relationship between the X and the Y axis in logarithmic scaling. And power laws aren't unique to Bitcoin. It happens a lot in nature, actually. You see power laws in mammal body size versus their metabolic rate. You see it in scaling of city size and population growth. You see it inversely proportional with earthquakes when comparing frequency and magnitude. And there's many more examples in nature, but those are just some of the big ones. Now, here's what the Bitcoin power law looks like. X-axis being logarithmic time, Y-axis being logarithmic price. Now, the trend this relationship creates is a straight line in logarithmic form, creating an R-squared value, or in statistics, it's known as the coefficient of determination of 0.96, which is 96%. Now, in layman's terms, this means that the scaling function of Bitcoin's power law explains 96% of Bitcoin's price action since the Genesis block was mined in 2009. 17 to 18 years of data, 96% accuracy with this model. Now, at the current moment, the more conservative power law model that I personally use, Bitcoin's price currently sits below the lower support band of the Bitcoin power law, which only happens approximately 4% of the time in 17 years of price action in Bitcoin, which to me signifies a pretty generational opportunity to be buying Bitcoin for cheap dollars, which is why I'm buying so much Bitcoin, so much MSTR, so much MSTE here. Not financial advice, of course. But in most popular Bitcoin power law models like this one here, Bitcoin's price action still remains in the Bitcoin power law channel, which means, again, Bitcoin is functioning exactly as it should. But if you're going to take anything away from the Bitcoin power law, it's this. Bitcoin is a finite asset, 21 million coins, competing with an infinite amount of fiat currency. What happens when you have more and more currency supply and a capped supply in Bitcoin? Bitcoin's price goes up long term. It's as simple as that. And it will continue to do so as long as governments print more money, which in the history of currency is all they have ever done. Fiat currencies have come, they've been printed to oblivion, and they have gone. But Bitcoin will always remain because it is a true finite store of value. And lastly, to understand Bitcoin, we have to understand its market cyclicality. If a YouTuber is going to screw up the MSTE trade or the MSTR trade, it's almost always going to be here. They don't understand Bitcoin's market cyclicality. Majority of people think all assets run at the same time, that liquidity lifts all boats at the same time. This is false because we have what is called a risk curve. General liquidity amasses at the front of the curve in real estate, in stocks, in gold, in long-term conservative and trusted assets, and any marginal liquidity sloshing around in the system flows down the risk curve into riskier assets like Bitcoin, or even riskier like altcoins and meme coins. Typically, a market cycle looks like this. Gold and stocks run first, silver and copper and tech run next, and finally crypto runs at the end of the market cycle, and it all starts over again. Now, the leads and the lags between these assets changes all the time. It's never the exact same every single cycle, but that's just the general cycle. These next few images are going to be from a user on X called Psychedelic. You can follow him at this handle here, but basically we're going to be looking at this first chart. So let me just pull up my screen here. Perfect. Okay. So on this chart here, you have Bitcoin at the top, you have gold in the middle, and you have the ISM PMI, which is pretty much the indicator for where we are in the business cycle. I mean, in this case, it's the US ISM PMI, so it's actually for the US economy, which I mean is pretty much most of the world these days. If it's above 50, the economy is expanding. If it's below 50, the economy is contracting. So what you'll notice is that when the PMI is in contraction, each of these areas, close to contraction or in contraction, and you see it here too, all three spots here. Hope you can see my mouse. I hope I don't look like an idiot. Gold runs. So when the PMI is low, when the PMI is in contraction, gold runs. You can see it right here. And then what happens? The PMI expands. The economy expands. What happens to gold? Gold contracts and gold goes sideways. And what happens when the PMI goes into expansion? Bitcoin takes off. And then the PMI reaches the top of its curve and Bitcoin crashes. And then what happens? PMI starts contracting again. What happens with gold? Gold starts going up again. And then the PMI leaves contraction, goes into expansion. And what happens? Gold contracts, gold goes sideways, Bitcoin takes off. Bitcoin has its parabolic move. And then the PMI starts contracting again from expansion into contraction, and Bitcoin crashes. And now, as you can see here, from 2023 to 2026, pretty much, the US has been in contraction, the longest contraction that we have seen in, I think, 40 or 50 years, which is why this Bitcoin cycle has been so weird, so different than the others. This was not the parabolic move in Bitcoin. This was this. We still have this to come. So what do you notice here? PMI contracts, stays contracted for a very long time. Gold goes absolutely haywire in that entire contraction. And now the PMI has gone from contraction. We are now sitting at a 55 PMI, and we are going into expansion. What is going to happen? Gold has already crashed from this number here. This is what gold was like 5,000. Now it's sitting somewhere like around here. So gold's already begun its correction. And what's going to happen with Bitcoin? Bitcoin's going to take off. How long is Bitcoin going to take off for? Nobody knows. That's the game. And so yeah, so that's like the introductory one. And then if we look at, what's the other one? This one. So it's gold versus silver versus copper versus Bitcoin. Now, granted, this is only for the last bull market cycle. So this is only one data point that we have to share here. But basically, this is how commodities run. And if we include Bitcoin, we see that Bitcoin runs at the end of this risk move. So first, gold runs. Then silver runs pretty close right after, which already happened in both gold and silver. They both ran, both had parabolic moves. And now copper runs. Copper is currently running. Copper is currently in the midst of its bull run. And what's going to happen once copper is close to getting done? Bitcoin takes off. And you're seeing the same thing right now. Gold already had its move. The money in gold has already been made. The money in silver has already been made. Copper is taking off. Bitcoin will now take off. So you have to understand market cyclicality with stocks, with commodities, with Bitcoin, because they do not all run at the same time. They take turns. There's leads and lags to this game. And that, my friends, is what you need to know about Bitcoin. And don't worry, this is the heaviest part of understanding the three layers of the MSTE investment. Once you understand Bitcoin and these three specific factors, its volatility profile, the Bitcoin power law, and where Bitcoin sits on the risk curve and where it sits in the market cycle, you now have a very decent grasp on what to expect from Bitcoin moving forward. Now, the next leg of the trade, MSTR. Simply put, MSTR buys a lot of Bitcoin and sells credit instruments like STRC or STRK or STRD, offering dividends to buy more Bitcoin. It sells MSTR shares for more Bitcoin, all in the name of its long-term goal. It's not just buying as much Bitcoin as they can with any means possible. It's increasing Bitcoin per share of MSTR. When MSTR sells stock, when MSTR sells credit instruments, when MSTR purchases Bitcoin, it does it under the sole purpose to continually increase Bitcoin per share to the shareholders, meaning that the longer you hold MSTR shares, the more Bitcoin exposure you have per share over time, regardless of if they're diluting MSTR shares to buy that Bitcoin or not. This is why MSTR will always trade at a multiple of its net asset value because of the expectation that each share will be worth more Bitcoin exposure tomorrow than it is today. This is where the MSTR lettuce-handed Larrys start falling off, where they make the wrong move. They see MSTR's recent small sales of Bitcoin from the balance sheet to pay off the dividend obligations of its credit instruments and buying back their credit instruments like STRC. They cower. They run for the exits. Oh my God, they sold Bitcoin. Oh my God, it's the end of MSTR. They see MSTR correcting 75% from all-time highs. Oh my God, MSTR is a scam. It's a pyramid scheme. It's a Ponzi. It's all over. They run for the exits at the bottom because they don't understand the volatility profile of MSTR and the long-term goals of MSTR. And because MSTR owns so much Bitcoin and they're doing it partially with debt and leverage, MSTR is more volatile than Bitcoin. If Bitcoin is a 50 vol asset, remember we talked about volatility earlier, MSTR is a 70 vol asset. So, and if Bitcoin is a 70 vol asset, MSTR is going to be a 90, 100 vol asset. So where Bitcoin is expected to move, let's say 50% in a year in either direction, MSTR is expected to move around 70% in the same time frame. And MSTR is almost fully dependent on Bitcoin performance. If Bitcoin goes down, MSTR goes down a lot. And if Bitcoin goes up, MSTR goes up a lot. Underperforming Bitcoin to the downside and outperforming Bitcoin to the upside. That is literally all you have to understand about MSTR. They are not just buying Bitcoin to have as much as they possibly can under any means necessary. They are creating more value per share of MSTR by accreting Bitcoin per share and ultimately financializing Bitcoin, creating credit and money markets around Bitcoin, creating a whole new Bitcoin economy. And now that you understand Bitcoin and MSTR, understanding MSTE, at least for me, is a breeze. And underwhelming performance should not bother you like it does all these other lettuce-handed Larrys. So MSTE is a covered call fund on MSTR with 25% leverage, meaning their entire fund consists of 125% exposure to MSTR stock, and they sell covered calls against anywhere from 33 to 50% of that MSTR portfolio, generating options premiums as distributions each month into your pocket. Now, with MSTE dropping from $18 a share to under $2 a share right now, is that bad performance? Well, the lettuce-handed Larrys who did zero research on the topic would tell you yes. Whereas if you looked at total return performance, as I'm showing you on the screen right here, since the beginning of the correction a year ago, MSTE is pretty much where I would expect it to be. Actually, it's performing better than I expected. It's leveraged MSTR, and so it underperforms MSTR to the downside by a few percentage points. So it's working exactly as intended. Will it outperform MSTR to the upside? Probably not, because it's a covered call fund after all, and you are giving up some of the upside for that sweet, sweet income. But I think it has a good chance of at least keeping in line with MSTR total return performance because of the leverage. But we'll just kind of have to wait and see and see how that unfolds. And the last point I wanted to touch on is the lettuce-handed Larrys screaming about the distribution cuts. Oh my God, what a scam. They used to pay 65 cents per share distributions, and now it's 10 cents. What a scam. What a Ponzi scheme. Anyone who buys this product is brain dead. Can't believe you'd recommend this product. To which I say, well, you obviously don't understand how funds and options pricing works. First of all, if a fund's share price tanks from $18 a share to $2 a share because of the underlying going down a lot, do you really think that a fund can afford to provide the same distributions of 65 cents per share now as it did when it was 9 times bigger and had more assets under management? Obviously, no. The fund would go to zero if that was the case. And the point we touched on with Bitcoin's volatility collapsing to the lowest reading it's ever had in its history, 34 vol, options premiums change with volatility. Higher volatility means more uncertainty, and more uncertainty means higher options premiums. MSTR volatility is cratering at the same time as Bitcoin's volatility is cratering. Surprise! This is also another reason why MSTE can't afford to continue paying 65 cents per share as it did before. The premium just isn't there. You will make less with lower options premiums. It's very simple. But as MSTR and Bitcoin pick up eventually, so will volatility and so will options premiums. It's cyclical. And that is the 3-tier approach you need to understand so that you don't fail the MSTE investing IQ test, like many people have so far. So please go over this video a few times if you really need to take the information in slowly and at your own pace. And please, please, please try to grasp the entire 3 tiers of this trade, not just one, because you need to understand the complexity at work here. With MSTE, we are talking about a derivative of a derivative. It's a complicated investment to understand, and the ones who don't do their due diligence are the ones who are sitting out on the sidelines feeling defeated, and they'll probably feel FOMO when price action and volatility returns to this market. Buying high, selling low, and buying high again. It's the way of the inexperienced and emotional investor. So do with this information what you will, guys. I hope I was able to help you grasp this investment a little better and you feel like you understand it a little more than you did before. I'm always buying more MSTR and MSTE. And if you enjoyed this video, I think you'll really enjoy this next one.